Hi, this is Ken Boyd with the Accounting Accidentally website. On the site, you'll find links to over 300 blog posts, and if you slide a little bit down, you'll find links to over 400 YouTube accounting videos. I think of all the spreadsheets that I use, this may be the most useful for accounting students. This is a linked document to explain cash flow. And what I've done here at the top is to take an income statement for 5 years, a balance sheet for 5 years, and what's linked below is a statement of cash flows. I think this is an effective tool, particularly for the indirect method of cash flow. So let's start talking about what this means. So statement of cash flows separates cash inflows and outflows into operations in brown, investing in blue, and financing. I always like to say that you should, if you're going through your checkbook to figure out cash flows, look for investing and financing cash inflows and outflows first. So investing is buying assets and selling them. Financing is raising money through borrowing money or issuing stock and paying dividends. You see dividends here. And everything else in your day-to-day operations, cash inflows and outflows, goes into cash flow from operations. So most cash flow is in the operations section. The indirect method reconciles the cash flow from operations, and it's important to know that this only applies to cash flow from operations. The indirect method does not apply to the other two categories. So cash flow from operations starts with net income at the top, and it makes adjustments here to get to cash flow from operations. And this is the tricky part. Because what you have to do is you see that we've divided between current assets and current liabilities. And what's happening here is you see that current assets, if there's a decrease, it gets added. If there's an increase, it gets subtracted. So let's take an example. Accounts receivable, if I click on the cell and I slide up to the top, we see that accounts receivable increased. And in the spreadsheet, that is a deduction. If I click on inventory and I slide up, inventory increased, that is a deduction. So you have to follow the rules here. Current assets, if there's a decrease, it's added. If there's an increase, it gets subtracted. I've also written it up here. Current liabilities are the flip side. Let's look at accounts payable. If I click on this $32 and I go up, you'll see that moving left to right, accounts payables increased, but it gets added in the statement of cash flow for operations. So following these rules, you make these adjustments, and what you end up with is cash flow from operations of 57, which is the sum of net income at the top, less all these adjustments get you down to cash flow from operations here at the bottom. So that's the beginning of our discussion on statement of cash flows, and I'll get to the rest of it on a follow-up video. I also wanted to mention that if you go to Conference Room, my online community for accountants, in the feed here, you'll see an article that discusses accounting for deferred taxes, a lot of other information that we have, and you'll also find on a home page a lot of other articles that you can use. Thanks very much for watching, and we'll see you next time.